Good afternoon, everybody. This is Mark Lambert from Data's Pendulum, where I'm partners with Anthony Marino, and we offer basically a timing and pricing service where it's sort of geared towards helping other traders use their own forecasts and supplement them with how to use intraday trading basically to help them time their intraday trades to go with their forecast that they presently use. What I'm going to do right now, this is May 22nd, which is a Sunday afternoon, approximately 5 o'clock, and I'm going to replay the day that I traded on Friday, which I extensively trade the Russell 2000, which is my instrument of choice at this point in time. And what I'm going to do is just show you my typical trading day and what I look for using Elliott wave and Fibonacci projection to enter and exit the market. Okay. What we're going to do, we're going to start off with the Russell 2000 on Friday morning. I want to show this is a larger degree projection, which is not going to be part of today's video, but basically this is a 61.8 and this is an 81% projection of the market, basically on a larger time frame. Well, this is the Thursday night action that happened overnight, and I usually start my trading day at around 9:45. Basically 9:30 in the morning, I'm already monitoring the market, maybe 9 o'clock. But what we're going to do is we're going to look for changes in the market as the market progresses during the daytime. Typically, what I do is I look at the past high, short-term high, and I would set a Fibonacci projection. I use a Fibonacci extension tool, but that's kind of like a misnomer. It's more of a projection because you're projecting forward where the market should be going. And I set this projection to the first inflection of the market, which Tony and myself, we've mentioned on a million times that the first projection is basically the first projection going in an opposite direction is mainly the most important projection that we ever look at, because the first inflection that a market makes is where we receive all our timing and pricing that we're going to project forward for the following day. And as you can see right now, this projection is basically reverberated all the way through the day. Went back to the 0% where it ended up retracing at the end of the day. But anyways, basically I got up on Friday morning. Market has been moving down, and my first alert is that we're at a 161.8 projection. Okay, and this is at approximately 10:45ish or so on Friday morning. And what I also look at that time is the market internals. The market internals is this. This is the advance and decline line of the S&P 500 or the New York Stock Exchange. So you can see that the market internals are confirming that the market is moving down, because you cannot fight the market internals. This is basically the flight control of a jet. This is the engine that drives the car. This is the market internals. So the market cannot do anything unless this confirms its move. Is what it basically plays down to. So the market has been moving down. It's Friday morning, and we're at a 161.8 projection, which should alert you immediately, right off the start. And what I'm going to do is I'm going to show certain things that I'm looking for all the time. I usually look at previous lows and so on. You know, if you want to go this way, there's really no previous low that happened, you know, within a recent history anyways. But basically, here we are. The market has been moving down in a series of lower highs and lower lows. So finally it reaches this point between 10:45 and 11 o'clock on Friday morning. And basically, as you can see, the market made a small inflection at that point in time in the opposite direction. And at that point in time, I was also doing some text messaging back and forth with a couple of talented traders, and they were saying, hey, you know, this looks like it's going to be a bottom, and I'm confirming the fact that, yeah, I believe it's a bottom also, or at a 161.8 projection, which often enough turns the market. And initially, I see a small 5-wave movement here. You can see 1, 2, 3, 4, then 5. And immediately I'm thinking to myself, you know something, if this retraces back to a higher low, then I'm going to take the trade. Because initially, no matter what, I'm thinking to myself that the market's going to have to make another 5-wave sequence. So I'm looking for a really short-term, basically, trade at that point in time, and also a small profit. I'm not looking to hit a home run here. I'm just basically looking to make a profitable trade. The market turns at this point in time. And when you look at the advance and decline line, we're at this time period right here. You can see it's almost like a bell curve. The market is losing momentum to the downside from the sell-off that it had from the beginning of the market at 9:30 in the morning, Eastern Standard Time, New York time. You can see it made a small lower low here, while this made a higher low. So right now there's a divergence in the market. What do you do at that point in time? Well, my thoughts are we already made a 5-wave move up. It's going to have at least one more 5-wave move up. So basically at this point in time, I take a long trade. And immediately within a minute, the market is confirming that we're going long because it starts to confirm the inside of the market. Anytime that the internals do not confirm what's going on, the market will initially snap back to where it was prior to that. So now that we're at this point, the next thing that you would do, because we're going to measure every single move, because that's the way we do intraday trading, is I would get rid of this Fibonacci projection right here, and I would now project this wave, because I would be looking for a larger degree 5-wave move at this point in time. Set the projection, the 3 points. This is wave 1, wave 2. You'll notice that the market moves right up, following this like a ladder, right to the 261.8 Fibonacci projection. And then it starts to roll over. And while this starts to roll over, you'll also notice that we also start to get weakness also in the advance and decline line, which is alerting me to the fact that, this is going to be something that's going to sustain, because the market internals are confirming that this turnaround is going to happen. So, 261.8 Fib, strong hit. There's a minimal. This looks like a basic 1-2, and then inside of this, you can almost say we get another small degree correction. Everything's moving up in like impulsive mode, 3-wave, basically retracements, impulsive mode, another 3-wave retracement, an impulsive mode. Now, what do we see here? Another 3-wave retracement. And you can also trade looking at the 3-wave retracements, which I often do. I measure every single time I see a retracement or another point move, basically another, let's say a lower high, lower low. I will always measure those moves. And when you take a look at this, one of the things that I look for is a 1-to-1 Fibonacci projection, which usually is telling me that this is going to be a correction. And what do we have here? This is an ABC. The C wave is exactly equal to the A wave, which is a 1-to-1 projection, as you can look along the line here with the projection levels. So now that is telling me that this has been wave 1 and wave 2. At this point in time, you would move your projection to a larger degree wave at that point in time, which would be this right here. As you can see, immediately the market, as it starts to lift off of this 1-to-1, it validates this next new fib that I just basically projected forward by going up to the 38.2, reversing once again to a higher low, and starts to move forward. And one of the things that I look at is that there's going to be a 5-wave move if it's impulsive. Sometimes it could go to 9 waves or 13 waves, but no matter what, 5 waves is a given. When you take a look at this, we have 1 wave, 2 waves, 3 waves, and when you look at this too, this is also a 5-wave move inside of wave 3. You got wave 1, 2, 3, 4, 5. Third wave is done. We get another 3-wave move down, corrective move once again, and then it starts to move back upwards again. And then when you take a look at this also, what do you got inside of here? You got this double bottom, you got wave 1, wave 2, wave 3, wave 4, wave 5. Any break above this high, which is the wave 3, it should initially tell you that this is 5th wave territory at that point in time, and this is where you should start booking your profits. 1, 2, 3, 4, 5. You got a 5-wave move. We breached the 161.8. For one reason or another, it ended up going past this. But the thing is, when you look back here, it also made a double top of that first inflection that you measured in the morning, which is this level right here. It came right up to it, kissed it, and then turned around. Now, when you're looking at this, though, higher high, higher low, higher high, higher low, higher high, higher low. You could still stay long here, but at this point in time, your stop should be here, or you should have booked profits as this reached this high. Now you come back up, and now what do we have here? This wave is a strange looking wave. It does not have the three-wave characteristic look that all these other ones did. This ABC, ABC. This one kind of has like a weird different look to it. Now the market moves back up. It touches the 161.8 once again. This is a one tick difference between this and the actual 161.8, just the difference between the bid and the ask in a three-wave move. So this is confirming to you that now, oh, you know something, the market is looking to turn around and go in the other direction. And at that point in time, too, you've reached this high, which is still below the 50-50. This is the advances, this is decliners. And the market internals are now starting to basically roll over. And this area right here is congruous with this area. Also formed a lower high and starts to sell off. So at this point in time, what do? You move your Fibonacci projection to this high, to this swing low, to this high. And this is the level that you're looking for to follow on the way down. And it should support at one of these levels. And when we breach this previous swing low, that's even more confirmation that we should end up going lower, barring any retracements that may happen in the meantime. A series of overlapping waves, then another impulsive move coming down. Basically, that's how I play the trading day, looking at the confirmation of the market internals and the wave count as it's moving up. And when you also looking at that, you also have to look at the bigger picture. Now, even intraday, when you're looking at the bigger picture, what do you have here? You got this low. You have a 5-wave move up. You have this series of overlapping waves because this one's overlapping into this territory, which means it's probably more corrective than anything else. I'm looking at this move to not breach this low. This low should hold, or I'm wrong, which happens often enough. But the thing is, the deeper it retraces, the less risky the trade is. Just so like in a trade like this, I would rather go long at this area with a very deep retracement, because if I'm wrong, I know at this area, and I can just either take the opposite side at that point in time, or just close out my trade, and I'm wrong and just wait for another setup. So basically, what I'm looking at in smaller fractals of these moves right here, I could also look at this whole larger picture and say, this is the swing low that must need to maintain. We've done 5 waves up. We're doing a series of overlapping waves. This could be A, B, C, X, A, B, and then now C is going to come down to 261, making a W, X, Y type of pattern right here. And then it should move back up again. And where do I know I'm wrong? At this swing low. But this is how you have to look at the market. It's just a series of waves moving forward in a synchronous pattern, and each wave needs to be measured to gauge whether it's corrective or impulsive.